So Datadog just dropped their latest earnings, and wow, at first glance they look absolutely incredible, a real blockbuster. But when you peel back the layers, the story gets, well, a little more complicated. So in this explainer, we're going to dig right past those flashy headlines and figure out what's really going on with this cloud giant.
All right, so let's set the scene. It's February 10th, 2026, and Datadog puts out its Q4 2025 results. Now you gotta understand, Datadog is a huge player in the cloud world. People often look at their performance as a kind of bellwether, right? It gives you a pulse on the health of the entire tech industry.
And boom, the market's reaction was just instantaneous. The stock shot up almost 15%. That's a massive jump. It's Wall Street screaming, "We love what we see," at least at first glance.
But hold on, that big flashy number is exactly what we need to question, right? Is that surge a real sign of a super healthy company, or is it just a knee-jerk reaction? To get the real answer, we've got to roll up our sleeves and dig into the numbers.
Okay, first things first. Let's talk about the good news. And trust me, there's a lot of good news. The main results weren't just solid, they absolutely smashed Wall Street's expectations.
I mean, look at this. You can see just how much they outperformed. Wall Street was thinking maybe 55 cents per share for earnings. Nope. Datadog came in at 59 cents. And revenue, the forecast was about $916 million. They blew past that with over $953 million. This isn't just squeaking by, folks. This is a real statement.
So you might be asking, where's all this growth coming from? Well, it's definitely not a fluke. It's all part of a really smart, really powerful strategy. Think of it like this. They get a customer to step inside the door, and then they show them all the other awesome rooms in the house.
In the business world, they call this land and expand. It's like the gold standard playbook for software companies. And let me tell you, Datadog are masters of the game. The idea is super simple, right? You land a new customer with a small deal, show them how great you are, and then you expand that relationship by selling them more of your stuff over time.
And the proof is right here in the pudding. I mean, look at these numbers. A whopping 84% of their customers are using more than one product. But it gets even crazier. Over half are using 4 or more. A third are using 6 or more. This tells you that customers aren't just kicking the tires. No way. They are weaving Datadog into the very fabric of their operations.
And of course, this all translates into big money. The number of customers paying them over $100,000 a year, that jumped by 19%. We're talking about serious mid to large size companies that are becoming the lifeblood of the business.
But wait, it gets even better. This is the really jaw-dropping part. Those huge customers, the whales, spending over $1 million a year, that number grew by an incredible 31%. This is crystal clear proof that Datadog is climbing the ladder, landing those massive enterprise deals.
So all of this feeds into this super important number called net revenue retention. It's sitting around 120%. Now, what does that actually mean? Let me put it this way. If Datadog didn't get a single new customer all year, zero, they'd still grow by 20% just from their current customers spending more money. That is a seriously powerful growth engine running under the hood.
Okay, we can't talk tech these days without talking about AI, right? And for Datadog, this isn't just some buzzword they're throwing around. Nope, it's a huge piece of their future, and they're coming at it from 2 different angles.
So think of it as a two-pronged attack. First, you have AI for Datadog. That's where they're using AI to make their own platform way smarter, like giving it a bigger brain to find and fix problems. Then you have Datadog for AI. This is where they're selling the shovels during the gold rush, building the tools that all of us need to keep an eye on our own AI stuff. It's a brilliant move, playing both offense and defense.
And get this, it's already working. The CEO himself, Olivier Pommel, came out and said they're seeing explosive growth in one of their main AI tools. He said usage grew 11-fold, not double, not triple, 11 times bigger in just 1 quarter. That's a huge sign that customers are all in on these new AI features.
All right, so far so good, right? Everything sounds amazing. Strong earnings, fantastic customer growth, a killer AI strategy. But, and there's always a but, this is where our story takes a little twist, because the company's own prediction for the future sounds, well, a lot less exciting.
Just take a look at this. They just posted an incredible quarter, growing over 29% compared to last year. Awesome. But then, when they talk about the next quarter, they're guiding for growth to slow down to somewhere between 25 and 26%. And that drop, even though it's small, is what made some people on Wall Street go, wait a minute.
So that really is the million-dollar question here, isn't it? Why would a company that seems to be firing on all cylinders suddenly predict a slowdown?
Well, what does the company say? Their official line is basically, hey, we like to be cautious. They build some wiggle room into their forecasts, a buffer, just in case things slow down, especially because a big chunk of their money comes from a handful of really big clients. It's that classic business move, under-promise so you can over-deliver later.
Okay, so let's try to wrap this all up. We've got this amazing performance right now on one hand, and this kind of cautious prediction for the future on the other. What's the big picture here? What should we take away from all this? Here's the whole story in a nutshell. The good stuff is impossible to ignore, right? They crush their earnings and revenue goals, they're adding big spending customers like crazy, and their big bet on AI looks like it's really starting to pay off. But the one thing that's making people nervous is their own forecast, which hints that this incredible growth might be cooling off.
And that leaves us with the big hanging question. Is Datadog just being smart and managing expectations with this cautious forecast? Or is this an early warning sign that things are about to get a little tougher, even for a giant like them? That's the real tension here, and you can bet we'll be watching to see how this story plays out.